This is the teacher Haris Bhatt, and you are seeing my YouTube channel Learn Accounting with Sir Haris. Today we are going to solve a question from the AS accounting paper, October, November 24, 21. Question number 1. That is basically from company accounts. October, November 24, 21. Question number 1 from company accounts. So let's study that. The financial year end of T Limited was 30th June 2024. On that date, the following balances were extracted from the books of account. 8% bank loan is given, that is 54,000. Administrative expenses 131310. Bank overdraft is given, cash carried inward, distribution cost, finance cost, fixture and fitting, inventory at 1st July, it means it is an opening inventory. Land and building is given, and motor vehicle purchases is given, retained earnings, revenue, share capital, trade payable, and trade receivable. The following information is also available. On 15 June 2024, goods were delivered and invoiced to a customer on a sales or return basis. The goods had a selling price of 12,000, including a markup of 25%. So sale price is given, and this is asking us for a sales or return basis. Always remember that sales or return basis, the concept of sales or return basis has come around in 2019-20. And after that, it has come in October, November 24, 21. Right? So we might expect this concept again to come in the question. On 30th January, inventory was counted and valued at 86400. On the same date, the customer informed T Limited that he had not decided whether to keep the goods. It is this statement basically telling us about the point number 1, including the point number 1, that 12,000 of the goods have been sent on sales or return basis, and the customer has not shown his intention to purchase the goods. And we have passed the entry for the goods. We have delivered the goods and invoiced to a customer. So we have to reverse the entries. Distribution costs included a charge of 3120 for motor insurance for the year ending 30th November 2024. So that is going to be the prepaid, because our financial year ends on which date? On 30th June 2024. Right? And distribution costs include a charge of 3120 for motor insurance for the year ending 30th November 2024. So June, July, August, September, October, November. Because 30th June is till 30th June 2024, it is our financial year. But after 30th June, whatever motor insurance is paid, that is prepaid. So how we are going to calculate it? 3120 into 5/12. Because 3120 is the motor insurance for the whole year, for 12 months. But it is paid till 30th November, 12 months ending 30th November. So it means that after June, the whole insurance, whatever has been paid, is prepaid. So we'll calculate 3120 into 5/12, because July, August, September, October, November, 5/12. Bad debts 540 is to be written off to admin expenses, yet to be subtracted, yet to be added in expenses. And debtors have decided to create an allowance for irrecoverable debt of 5% of trade receivable, again to be charged to admin expenses. Admin expenses 680 were outstanding, so that will be added in admin expenses. Land and building include land at cost of 60,000, and land is not going to be depreciated. Depreciation, fixture and fitting 10% reducing balance method. Land and building straight line, which will go to the distribution cost, and motor vehicle 20% reducing balance method, which will again go to the distribution cost. Taxation for the year estimated to be 26,000. Point number 6. So statement of profit and loss may say taxation will be subtracted, and it will also be shown as current liability. On 30th June 2024, T Limited took out a 5% debenture of 45,000. On the same date, the company repaid one half of the 8% bank loan together with the 3 months interest outstanding at 30th June 2024. None of these transactions have yet been recorded in the books of account. यानी ना तो आपने 5% डिबेंचर जो लिए 45,000 के, बैंक डेबिट 45,000 and 5% debenture credit 45,000. We didn't pass this entry on 30th June. And with this amount of 45,000, we have repaid one half of the 50% of the bank loan. So obviously, bank loan is going to be debited and bank is going to be credited, but interest is also paid on this bank loan with the 3 months interest outstanding. That is also going to be paid. That will also come with the as interest on loan. None of the transactions have been recorded in the books of account, and we need to record these transactions also. So let's prepare the statement of profit and loss. So I will start here. statement of profit and loss. Before preparing the statement of profit and loss, I just want you to go for the entries regarding the sales or return basis. We'll move on to that. So we'll pass the reverse entry because you have recorded the entry of sales, which is not yet sold out. So you will pass the entry sales debit and trade receivable credit because the goods have been given on sales or return basis. You have to reverse the entry for sales. Sales are debited and trade receivable is going to be credited with 12,000. Again, the cost of these goods will also be part of the closing inventory. So we need to add those cost of goods to the closing inventory. So we'll pass the entry closing inventory debit and cost of sales is going to be credited. So closing inventory debit and cost of sales credit, but with the cost of the goods sold. So how we are going to find the cost of the goods sold? That is cost of goods sold, cost of goods sent on sales or return basis, that is 12,000 and the markup is 25%. Problem is this, that this 12,000 is basically given on selling price. So you have to convert the markup into margin. So that is the formula will be 25 over 125 percentage over 100 plus percentage multiplied by 12,000. You will get the profit which is included in the selling price. You can't multiply with it with 25%. Why? There is a problem. Because 25% is the markup. So you have to convert markup into margin, percentage over 100 plus percentage. And then this margin will be multiplied with the selling price. So 2,400 is going to be the profit, which is included in the selling price. So the cost of the goods which has been sent on sales or return basis, that amount is 9,600. 12,000 minus 2,400. So this is how we have calculated that. And that has not been sold actually. So we have to add this up because it is not yet sold. So whatever entry we have passed, that is wrong. Why? Because we have taken the goods as sold. जबकि चीजें वो बिकी हैं ही नहीं, हमने उसको ट्रीट कर लिया हुआ है कि जैसे चीजें सेल हो गई, but they are not yet sold. They have been sent on sales or return basis. हम उसकी रिवर्स एंट्रीज पास करेंगे. So I'll start with the revenue now. And for revenue, let's see what is the amount of revenue. Amount of revenue given in the question is 705,100. I will write 705,100. And sales, we have to subtract 12,000 from revenue because that is not part of sales. So 705,100 minus 12,000, kitna aayega ji? That is going to be the amount of sales which you are supposed to record. That is 693,100. Okay. Now less cost of sales. So for cost of sales, we have to calculate opening inventory, add purchases less closing inventory. So opening inventory given in the question is 93,400 plus purchases. And purchases are going to be given in the question. Let me check. Here it is purchases. 293,780. 293,780 plus carriage inward is also given in the question. We will add carriage inward. I think carriage inward is given. Let me check. Here it is carriage inward 820. I will add 820 into this 820. Right. And then I have to subtract the closing inventory to find the cost of sales. Let me see, either some part of the closing inventory has to be adjusted with this particular question. Nothing has been given currently, which is supposed to be adjusted with the closing inventory. But as the goods have been sent on sales or return basis, so the amount of closing inventory needs to be adjusted. So it is 6,400. That is the closing inventory. We have to add the cost of goods sold into the closing inventory to find the correct amount of closing inventory. So it is 6,400 plus 9,600. That will be the cost of closing inventory. Why, sir? Because these goods have been sold, but it is not yet sold. these have been sent to the customer on sales or return basis. You have to add them up again in the closing inventory. So the closing inventory is going to be 96,000. So I will subtract 96,000 from here. So what is the answer? Please tell me. You will get the gross profit. Then I have to subtract less distribution cost and then less. Can you tell me the answer? Admin cost of cost of sales. So we'll get the profit from operation. Less finance cost. We will subtract finance cost. We will get profit before tax. And then less taxation. We will get profit after tax. Okay. So what is the amount of cost of sales? If we just look at the format given in the question, that will also give us the same idea. Revenue, cost of sales, gross profit, distribution cost, admin, profit from operation, finance cost, profit before taxation, and then profit for the year. So you didn't inform me about the answer for the cost of sales. That is okay. Somebody has told me the answer. Book may this is not in the book because this is the current paper of October, November. So this is not in the book. So 93,400 plus 293,780 plus 820 or minus 96,000. So that is 292,000 is the amount of cost of sales. So I will write here 292,000, and then you need to subtract revenue minus cost of sales. That will you will get your gross profit. So what is going to be the gross profit? That is 401,100. G. So gross profit is equal to 401,100. Oh, 401,100. Oh. Okay. Now I have to subtract the distribution cost from this. I think in the question also, they haven't given us the heading of the operating expenses, if I'm not wrong. Yeah. Distribution cost, admin cost, directly he has given the requirement. So let's talk about distribution cost. If we talk about distribution cost, which is given in the question, so you will see that distribution cost given in the question is going to be how much? That is 114,870. We have to go for the working for that. So let me do it here. 114,870. That is the distribution cost given in the question. 114,870. Now, there is a prepaid distribution expense. Distribution costs include a charge of 3,120 for motor insurance for the ending 30th November. 3,120 into 5 over 12. What will be the amount? You need to calculate. 3,120 multiplied by 5 over 12. That is the prepaid distribution expense, and that's supposed to be subtracted from here. कितना आ जाएगा ये? 3,120 into 5 divided by 12. That is 1,300. We subtracted. Then we have to add depreciation, which is a part of distribution cost, and that is on land and building. Rather, land is not depreciated, so 2% on building and 20% through reducing balance method on motor vehicle. So land is a part of how much land costs 60,000. So let's suppose land and building 165,000 minus 60,000, 1,05,000 into 2%, because that is straight line. That is 2,100. The 2,100 will be added as depreciation on building. Now we have to subtract depreciation on motor vehicle. 82,000 minus 34590. Because the reducing balance is supposed to be used. So 82,000 minus 34950. Sorry, 82,000 minus 34590. into 20%. The answer is going to be 9482. Let me see if I'm right. 20% is there. Yeah. So the answer is going to be 9482. So I will add 9482. So please add this up. You will get the amount of the distribution cost to be written over here. Then we will move toward the admin expenses. But you have to go for the calculation of this piece for me. And if you talk about the admin expenses, so admin expenses given in the question are 131310. So I will write here 131310. Then there is going to be expenses, accrued admin expenses, unpaid admin expenses, outstanding, which is supposed to be added. So outstanding expenses 680 is going to be added. So I have added, sir, where it is written. Let me show you where it is written over here. Admin expenses are outstanding, so 680 is going to be added. Now I have to go for the 10% fixture and fitting will go to the admin expenses as depreciation by reducing balance method. So let's see, fixture and fitting are given 16,200. 16,200 minus 9560 into 10%, 664. So 664 is the depreciation which is supposed to be added in admin expenses as the depreciation on fixture and fitting. Then I will add bad debts because in the question he has clearly stated that bad debt should be part of the admin expenses and it is to be written off. It is not yet written in the under the heading of expenses. So 540 I will write here. And then I will add provision for doubtful debts and how we are going to calculate. Let's see. So the trade receivables given in the question are 69740. First of all, 69740. Beta, first of all, you have to subtract 12,000 from trade receivable because of the sales or return basis. Remember, revenue may say we have subtracted 12,000 because it is not a part of the revenue. Same is the case with trade receivables. 12,000 is not a part of trade receivables. It needs to be subtracted. Then 540 of bad debts also need to be subtracted because they are bad debts. We are not able to recover them. And then the remaining amount, on the remaining amount, we have to calculate depreciation. Or we have to calculate provision for doubtful debts. So 69740 minus 12,000 and minus 540. So the answer is going to be 57,200. Okay. Now let's see that what is the percentage of provision for doubtful debts required in the question. That is going to be 5%. And if there is any provision given in the question previously, no. Previous provision is not given in the question. So we have to increase all the provision from the scratch. So 57,200 multiplied by 5%. So whatever be the answer, 20.05, 2860. That is the provision. And we have to increase the provision by 2860. We don't need to see that either there is already a provision available because there is no provision available. So I will add plus over here and that will be 2860. So what is the answer? You need to tell me the answer of distribution expenses also and you need to tell me the answer of admin expenses also. Both are required. 114, let me calculate it. 870 minus 1300 plus 2100 and plus 9482. 125 152. You can calculate it with me so that there should not be any error. 125 152. Then for admin expenses 131310 plus 680 plus 664 is the depreciation plus 540 again bad debts and plus 2860. So 136054 is going to be the admin expenses. Now I can write here distribution costs needs to be subtracted. That is 125152 and admin cost again needs to be subtracted. That is 136054 and now you will subtract them, you will get the profit from operation. So can you please do that? What is the answer from the profit from operation? 401,100 minus 125,152 and minus 136,054. So 139,894 is going to be the answer of the profit from operation, 139,894. Now I have to subtract finance cost from this. So let's see the finance cost is given in the question or not. 8% bank loan 54,000 is given, and finance cost is given over here 5180. So if you just calculate the finance cost, 54,000 into 8 divided by 100, that is 4320, right? There the finance cost given is 5180. So it means there is some other finance cost also which we don't know actually. Maybe that is what because of the bank overdraft, because of some other reason there is a finance cost. Now I have to, this 8% bank loan, we are making the payment, and the interest is supposed to be paid along with this, and that is going to be into 3/12. That is 1080. Let's see. I will show you. On 30th June 2024, T Limited took out a 5% debenture of 45,000. So I will pass the entry bank debit and debenture is going to be credited. I can pass this entry. Bank debit with 45,000 and 5% debenture is going to be credited. But there is no interest on these debentures. Why, sir? Because they are issued at the end of the year. And with that, we are making the payment of the 8% bank loan. So we are making the payment of the half of the bank loan is supposed to be paid. 8% is the interest. And with the 3 months interest outstanding at 30th June. And we are also paying the 3 months interest on bank loan, which is 1080. Bank loan, how much is the bank loan? 54,000. So half of the bank loan is paid. That is 27,000 with interest, right? With interest. So interest is 1080. So the entry we are going to pass is going to be bank loan debit with 27,000, because we are making the 50% of the bank loan we are paying, which is 27,000. Then we are also paying interest on loan on this. So that will be an expense, finance cost, but it's 1080 for 3 months. And bank is to be credited with the total amount which we are paying, that is 28080. So bank is going to be credited with the total amount, 28080, right? Now let's move forward. That interest on what is the finance cost? 1080, which is here. And there is another interest cost which is given, already paid, that is 5180. So the finance cost is going to be 5180 plus 1080. 5180 plus 1080. Is it 5180? Yeah. So let me add it up. 5180 plus 1080. That is 6260. So we need to subtract the interest cost 6260 from the profit from operation to get the profit before tax. So 6260 minus 139, let's say 894. 139,894 minus 6260. That is 133,634. 133,634. If you have any problem, you can ask me. 133,634. Then you have to subtract the taxation, which is given in the question. That the taxation liability given in the question is how much? That is 26,000. So I will subtract 26,000 taxation and I will get the profit after tax. So this is how we have calculated the profit after tax. 107634. So this is how we have calculated 107,634. Sales return basis will be subtracted from sales, subtracted from trade receivable. Bad debts will be subtracted from trade receivable, and then we will calculate the provision for doubtful debts 5%, in which we don't need to increase provision or decrease provision क्योंकि पहले से provision को पड़ी नहीं हुई. So 2860 पूरी की पूरी ही increase होगी और वो is a part of admin expenses along with bad debts. And other admin expenses we have already recorded, whatever is charged to the distribution cost and to the admin cost. Now let's move forward. What is the next part of the game? He wanted us to prepare calculate the balance of cash and cash equivalent. That is very easy. Why, sir? Because cash and cash equivalent is given in the question, and that is the bank actually. Not with the name of cash and cash equivalent, though, but it is given that cash and cash equivalent is here. Cash is 240 and bank overdraft is 12380. So both will be part of cash and cash equivalent. Both will be part of cash and cash equivalent. Okay. So we'll calculate the cash and cash equivalent. How? 240 positive hai, whereas 12380 is negative. Okay. So let's do it. I will do it here. 240 is positive. Cash is there. Minus bank overdraft is 12380. So minus 12380. Then we will add bank because we have issued 5% debenture at the end of the year, 45,000. And then we have paid bank loan and interest out of this amount, which is 28080. So this is how we will be having the answer for the cash and cash equivalent. So how much is going to be the answer? Obviously, it comes positive. I will do it in the same manner, 240 minus 12380. Cash and cash equivalent means cash in hand, cash at bank, and anything which can be converted into cash on within 3-month notice. Plus 45,000 minus 28080. 4780 is the cash, which is positive figure. So cash and cash equivalent is positive 4780. So we have got the answer. And the marks of this particular part is 4. 4 marks are there. Solve this particular part. Then statement of financial position, and he wanted us to prepare the equity section of the statement of financial position. So let me prepare that and we'll do that easily. So I will write here the equity. Then comes what comes? Total equity. Okay. Then liabilities. In liabilities, we have non-current liabilities. And then we have going to be current liabilities. Okay. Let's suppose talk about equity section first. We include ordinary share capital in the equity section. Is there any change in the ordinary share capital in the question? No, there is no change. So let's see what is the amount of ordinary share capital in the question. So the amount of share capital is written here. That is 80,000. Any other thing? Share premium, other thing? No. Retained earnings is given 38450. But first, let me write 80,000. 80,000. And then I will write retained earnings. And if you see in retained earnings, it is given 38450. So I will add like here 38450 plus profit 107,634, right? Minus if any payment is made because of dividends, he will subtract that. But I think dividends are not given in the question. Otherwise, I would have subtracted the dividends from the retained earnings, but there is nothing like that. Regarding dividend is given in the question. So let's go for the total of this. And I will go for the total of this 38450 plus 107,634. 146,084. 146,084. I will add this up. Plus 80,000 means 226,084. So this is the answer of the total equity. Now I have to go for the non-current liability. That is 5% debentures are given, which we have already calculated with no interest. And the amount of debentures is going to be 45,000. There is another non-current liability with the name bank loan. But always remember, this is the 8% bank loan, and half of the bank loan is already paid. So bank loan will come how much? 27,000. Why, sir? Listen, half of the bank loan is paid. That's why I didn't drop the entries yet. Bank debit, the 5% debenture has been issued. So 45,000, we have to add it in the bank, and debenture is a non-current liability. I will write in the non-current liability section. And 8% bank loan, which is a non-current liability, already available with us for an amount of 27,000 or 54,000, sorry. It is decreased by 27,000 because we have paid the half of the bank loan along with interest on loan. So interest on loan is not outstanding currently because 3 months outstanding interest has been paid. It means that remaining has already been paid. Matlab 9 months has already been paid. And other than that, 3 months have paid also. We have paid the 3 months interest also along with the bank loan. So 27,000 is going to be the non-current liability. Now I'm going to write the current liabilities, but I'm going to rub it up now because in current liabilities we used to write trade payables. Then we have to write the outstanding admin expenses. You must be thinking, sir, prepaid क्यों नहीं है? The prepaid is supposed to be written under the heading of current assets. So here we just need to write the current liability section, not asset. So trade payables are given 32160. So I will write here 32160. Then outstanding admin expenses are going to be 680. Sir, how come, sir? Because you have added them over here, 680. They are outstanding. So it will be current liability also. Then you have to write bank overdraft. No, because your bank overdraft is completely changed into positive balance. That is 4780. That's why we have calculated that. Taxation payable will come because that is going to be a current liability because 26,000 of tax, which is yet to be paid, will also be shown in the current liability section because he has clearly stated that there is a tax liability of 26,000. So where it is written? It is written here. Taxation for the estimated to be 26,000. It means that it is not yet paid. We have just estimated the tax liability. So now we will go for we'll add them up, all the current liability section. 32160 plus 680 plus 26,000. That is 58840. 58840. And I will add all the other things up. So that will be 226084 plus 45,000 plus 27,000 and plus 58840. That is 356924. I will write here 356924 is going to be the total equity and liabilities. Let me see, either they have asked us to prepare the statement of profit and loss, cash and cash equivalent, which we did already, and the statement of financial position, equity, total equity, liability, non-current liability, total liabilities, and total equity and liabilities. We can go for that also. So I can write here total equity and liabilities. G. So any problem you can ask me. This is the end of the question. Any question you can ask me, I will repeat again. So if any point there is any confusion, you can ask me. I can repeat again. There is no problem in that. So you can take the pick also. And this is the question of October, November 24, 21, where we have prepared some part of the liability side of the balance sheet, statement of profit and loss. And there was a little bit confusion regarding the debentures, which we are done with that. Depreciation is normal, taxation is normal, prepaid and admin expenses outstanding is normal, bad debts and provision. We subtract bad debts first because they are the bad debts not yet written off. So 540 is subtracted from trade receivable, and then you will calculate provision. Then there is a question of sales or return basis. It has four effects actually. It will be added in closing inventory with the cost of the goods sold on return basis, 9,600, and 12,000, the goods which has been sold for 12,000 wrongly, subtracted from sales revenue and subtracted from trade receivable. So any question, Mustafa? How did you find the question? Easy, difficult, very difficult? कितनी समझ आई है? ईमान और किसी को प्रॉब्लम है तो बताएं जी. Assess the directors' decision on 30th June to take out the 5% debenture 2028-29. Justify your assessment by considering both advantage and disadvantage of the decision to the company. Already we don't have a debenture because 8% bank loan, half of the bank loan is paid, but 27,000 of the bank loan is still there, and we have to pay interest on that bank loan of 8 with an amount of 8%. But debentures we have taken, that is a non-current liability. Again, it has to be repaid, and the interest cost will increase in the future because the loan interest and the interest on debenture will have to be paid. So profit will decrease because of that, but the interest rate is less than the bank loan. The debenture interest rate is 5%, where the bank loan interest was high. It was 8%. So it is fruitful in that regard that we should try to pay back all the bank loan in the future, and debenture will be the best part of the story. But interest cost will increase. Obviously, profit will decrease. We have to pledge a security, right? We have to show the financial statements, right? Take to issue debentures. Collateral may be